Recording. Okay, good afternoon. This is Fari Hemzi. It's about 5:07 p.m. Eastern on Wednesday, 21st of April, 2021. With me, I have the pleasure of and honor of having Mark Esposito and Michael Burke with us. Michael was for 25 years, I believe, or so, with TradeStation. He was instrumental in some of the work we've done here recently. And of course, always a great friend and a mentor on the software side, and a big supporter of Hamza Analytics from day one, when we were a tiny little bit. But I believe most likely probably saw the potential. And of course, we followed the rules. We did what they asked, and they helped us with what we needed. And part of that is what Mark Esposito and I did on their option station with them for the last, I don't know, 5 years or so, maybe a little bit longer. As a matter of fact, some of the stuff you see on the most recent releases of TradeStation, especially, and also option station, is some not all, some of our, or most of our suggestions. So we're happy to have him with us today. And of course, Mark Esposito, as you all know, ran for about 27 years. I was above the early designated, or I said no, DPM, as a designated primary market makers. Yeah, at Cboe, big name. He was in was biotech stuff. Of course, Merck Pharmaceutical. It was his bread and butter there, and he did a great job there. Of course, then he took over marketing for One Chicago, which was a hybrid of Cboe, CME, and Interactive Brokers, which was run by Tom Pefferdy. They have an operation called Timber Hill. That's their market making and so forth. And what they did was single stock futures. He grew it to a great size. And then, of course, in 2015, he had met his goals. And then, unfortunately, once he left, they just could not keep adding volume. And exchange to survive, volume is everything. And last year, I think September was the last contract they had into the futures, and they shut it down. If we go into a no short position, like we did in 2008, especially like in financials, they did, the only way you can short those would be having single stock futures. And unfortunately, that capability is gone. That's a shame. I was asked by the One Chicago when it started, actually management before Mark joined them, that's how I met Mark, was to me and a couple of other website owners to support them on having webinars and showing what the values are, and as a practitioners. I've done it also with VIX and all that stuff with Robert Whaley and so on. But in that area, that's how I learned about Mark. And Mark was very instrumental to suggesting to me to move out of LA to Chicago, and really it changed my perspective and knowledge, and learned institutionally how this whole system operates. So I'm indebted to Mark. Okay, quickly, very quickly, housekeeping item before we get into this. I'm sorry, I've had a very bad bouts with psoriasis, as you all know. I've had it off and on since 2003, but in February on, it became really bad, and it would spike up. Of course, I was really worried about COVID down here. We were right in between. I wasn't old enough to get the shot, and it was rampant here. And we had a lot of naysayers and science deniers that would go around without any protection, and really not just taking risks with their own lives, but adding risk to other people's lives. So, trading was not good. And then on GME on the GameStop day, we had a very unusual day as far as OTF was concerned. Our flagship product, which works based on block trades. We have never seen so many blocks. We've never seen so many blocks. And it wasn't that people were excited to trade ES&NQ. No. Very large traders like Citadel and so forth, for hedging purposes, had no choice but sell the futures. And it was so we had to pull back, and I had to figure out what is wrong here. And it took me a little bit of time, and I can't get into detail. Proprietary work, we had to do some surgery on our some of our code, and make it a little bit more discriminant. That is, to be able to understand the blocks a little bit better. Think of it this way: you're a radar station, and like NORAD, and you're watching, the northern part of Canada has an early warning system. As you see a bogey coming, you can identify, you can look at the speed, and so on and so forth. Well, what if you have thousands of bogeys showing up? Your whole screen goes white, your radar screen. That's what was happening inside the software. We just had overwhelming. So we had to, do a couple of statistical moves to amend that and mitigate that, and that took us probably a month, and then we had to test it. It took us almost about a week to figure out what's wrong, and then a lot of data downloads and how to mitigate. One of the tools that helped us to combat that was what we're going to present now. As you know, we did some webinars. Admiral and I did. Mike Burke was also there. I think Kristen Wagner was there. Ken Simmons, which are both now involved with some of the other projects they're involved with. For Ken, his family issues, his mom. But so they have not been involved with the latest version we did, but to that point, what we discussed with you guys was our watch list. As a matter of fact, there was a testimonial sent out recently by Phil Hutton. He basically said, "I don't want anything else. You have great stuff. I'll come in when I need it, but right now I just want this." And he's going to provide us. You saw the testimonial went out. Unfortunately, sat here for a while, but I was. I think for a week or two, I couldn't even touch my emails. That's how bad things were for me. Psoriasis can get you into an itch that's nonstop, really painful. Long story short, he completely switched to this. This is Phil Hutton, and he's quiet guy, does his thing. Not a big trader, but very methodical, very systematic. And he's published some of his returns, and he's also says this stuff is just amazing. Of course, Mark can expand on that, on the work he has done. He has shared some of the stuff with you on the work that he's done for his fund, for biotech fund, and some of the non-biotech names are also been very helpful using these filters for creating some alpha when you have a very high volatility in biotech, mainly because COVID. Biotech's always been a political issue. If you look at whether campaigns or administrations in place, because of the 20% part of GDP now, I think it is close to 20%. I remember years ago at 14. Healthcare is a major fiasco out there, and so per capita we spend so much. So that volatility forces the fund manager to say, "Hey, sometimes I got to do something different because I can't go in and get killed every day." Some days have been brutal. I think there was one of the. I think Mark can expand that. I forget which one, Mark, was. There was some news on one of these either therapeutics or vaccines. It's not J&J. It's not recent. It was like 5-6 weeks ago. They just killed everybody. It's just like, why don't we shoot? We will execute first, court martial next morning. That's what happened. I mean, just blood everywhere. So
the political environment is controlling the biotechs right now. So they get uncoupled from the market. I mean, the market was up today. They were all up, but the last 2-3, they've been down in general for the last 8 weeks.
Wow.
Because of all the comments that are being made by the government of pricing. And that's a very sensitive issue with all of them. And they've, fired back at the government by saying, don't forget what we just did with COVID, what we accomplished. Don't be so critical and harsh to us, because you got to be able to allow us to continue with R&D,
right,
which is how they create these fascinating and wonderful cures for these very difficult situations.
And so fast.
Yes.
Yeah.
That was historical, what they accomplished for COVID. It normally takes a solid 3 to 5 years to create a true vaccine, and they did it in 11 months.
Yeah. Amazing. Yes. Well, part of it's computers. The advancement in the genomics and the computer power, and this was good. Listen, I had my second shot, and actually 2 days from now I'll be at 14 days post my second shot. So technically I should be at 100% protection, But I still urge all of you, please, double mask, gloves, overalls, hats, cap, baseball cap, please. We're not out of the woods yet. Good. So let me just go back here. Then, so briefly, what I added recently was these dots. We're going to get into that shortly. These dots. What they do is they create a band around the DMZ, which we had from another indicator a couple of years ago. And then Michael Burke comes in, and within a week or so, 10 days, he put these bubbles up, which was what shows when we have an event. That is, these bars are crossing these levels. Of course, I'd written the code. Admiral had massaged it, put it into practice. We came back to Mike, and Mike took that and created a white box. And once we got the white box working, what Admiral wants, then we put in our black box, and this is the end result. The next version, the next edition was, what does ATR do? As you know, let me put the ATR up here. Hold on. ATR is, excuse me, is it up there? No. Okay, let me add. It's not what we're using. So let me add it separately. ATR. Oh, I thought I had it here. Hold on. No. Okay, I'll add it. Hold on. ATR is open source, written by Wells Wilder, same guy who did RSI and ADX. Oh Jesus, here we go again, Faye. Pay attention. Sorry. No. Hold on. Add. Sorry. This average true range. What it does, it's a very, very easy, understood, there we go, indicator for giving you a look back and give you a sense of an ongoing real-time volatility measure. Here we go. Now, at the end of the day, it's dropping dramatically because we're very, very tight. That's why these things are lighter. Now, I don't necessarily need to plot that all the time. It's computed inside. But I like to use 7 bars, 6 bars, no more than that. I use a 7 bars with 3 minutes, 6 bars with 5 minutes. Why? Because when the market opens, you want to lose this part quickly, okay? Otherwise, you get a huge expansion, always, and the volume says that too. Opening orders coming in, cash is open, the big guns come in, so that your volatility is going to open up. ATRs are going to shoot up like this. Now, if you had and typical values are, I believe, 14 and 14. That's a default that Wells Wilder designed. Remember, back then they weren't doing intraday stuff like this. They were doing daily charts, hand plotting it off of Wall Street Journal, one day old, okay, or Barron's at the end of the week. Don't laugh. I did that too. Yeah, I did. When I was doing the first advanced decliner from Marty Zwick's book, I was getting data from Wall Street Journal for a day before. My broker stopped. I had a broker at Merrill Lynch. He stopped taking my calls because if he says, if you don't have an order, don't call me. I said, what? Like, can you look this up? Can you look it up? He said, listen, that's your problem. My clients don't even ask those questions. You're too smart. Go and do it yourself. Hire somebody to sit there, put the numbers in. So my younger brother would sit there to play with the computer and do some other thing. I schmooze him by giving him the stuff to put in. And so we would keep track of what the advanced declines were because Marty Zwick had shown, if you read his book, that was one of the first market timing tools. You keep track of advanced decline, plot it, and then you watch for 3 rate changes by Fed. And then you make a decision to go long for a long time or short for a long time. Okay. Well, that all worked until 2008. After 2008, we stopped doing that because with the rates going to 0, it didn't make sense anymore. And they had to keep it at 0.1. The economy was in terrible shape. And B, we had too much debt. The amount of debt we had is small compared to what we did last year. But still, huge numbers. And I think rates are always going to be kept low. The rates, it's a covenant to net savers are broken. Because if they uptick, we bust the budget. We could be spending 30, 40, 50% of the national budget on debt service. So they're not going to change. Trust me. So that indicator went out of the window. But that was the value of doing it back then like that. Here, now we're doing real time. We have 2 tools, thank you. Companies like TradeStation. But we have to invent other tools to measure that in real time. And I'm a lazy bum, you know that. I don't want to go and guess. I rather have a deterministic model go there and give me a value, and then I apply the value. So what we do is we monitor this. As this expands, it goes here. And part of this also will give you a choice in the setup that you would see. You have a multiplier factor. How many times of ATR you want? So I'm looking for 7 bars back on the 3 minutes. We want to have ATR. You could do 1 if you want that's a little bit tighter. But we have found the 1.5 fits the envelope, this limit envelopes really, really nicely. This afternoon, I mean, let's go here, near the close. I mean, look at, this was, hold on, let me do it like this. Okay, you can see, okay? I mean, just, once it crossed it, you get a double, you get the double bubble, okay? Great word, by the way. Great name for it, Michael. The double bubble, you go through, you cross that from underneath to the red bubble, then the green bubble. And remember, these are crossing, but they're always, the code is such that the top line is green. So that says long above it, short below. Okay? You cross that. That means if you were short and you sing here, watch out. Your head will be handed to you very shortly. When past the double bubble. Get out or do it. There's a button called reverse. How about using that? Okay? Press it. That's why I said earlier. This webinar could change the way you trade ESNNQ. It has mine. So then you run up, you see how it goes there and hits the red lines. It hardly gets above it much. And then that's a reversal. So it sells down. So in this place, you need to make a call there as far as, hey, what do I want to do with a long position I have? And beauty of that is, even though DMZ, which is a modification of dual CI, the bigger brethren of CI, but because it's bigger and it's using a little more of what we call not average, but think of it like a multiple smoothing, trying to make it more reactive, because when you average, you slow down, right? Your accuracy, you create a lag, and lag is about half cycle out of phase. Okay, we try to work that in reverse, put it back in using limit theory by special smoothing functions. But once you do that, this itself is slowing down the DMZ. But look what happens underneath the CI. You're running CI with it. You see how slowly this change codes will go back and forth. CI a little bit faster, but CI also gives you kind of like terminal targeting. It says, listen, we're almost there. And you see that more. That's a basic candlestick. That's a reversal one. You see that, you get out. Do you get short? You could, but I wouldn't do that time of the day. I'm sorry, this is 11:30. Time of the day going into lunch. As a matter of fact, today I left. I just said I don't want to be around. But then you have another one hot. It still doesn't get out. Now this one pulls back. So could you short here? Yes, you could. But remember, if you're shorting from here, this should be your target. If you're shorting from here, this should be your target. In between is where you have trouble. That's what's called demilitarized zone, DMZ. If you're in there, you got to decide. You got to make decisions. But if you're above it, you're shorting it. Or if you're coming to a dot, you want to long it, then it becomes more mechanical. And now, look what happens here. The DMZ itself, that's over here. I'm sorry, the DMZ itself crosses. Once the DMZ crosses, we're in a different ballgame. Now look what time of day it is. Lunchtime. Volume is very low. We're looking at volume. Very, very low. Probably lowest of the day, hitting us about 1:45. 2 p.m. I don't know if you had news or anything, but we had a little bit up move there. But look how tight these are. Why? Because the levels we were. I mean, listen, this morning we were hitting 27. Look at the ATR was in the morning. 28. Listen to this. Yeah. 27, 28 area. Yeah. Right there. 30. We hit 30 today. Now, I remember 27 from the screen. Now, we do have it on for our OTF package. We do have this on a, remember, our chat rooms are down because of the security issues, which I will get into in a sec. But we did, again, Tony, thanks to Tony, You made a suggestion that you have this go-to meeting, go-to webinars. Why don't we use one of them with some software so at least we can chat? And our people are used to collaboration, looking at different things, looking at the news, looking at the what's happening in the complementary markets. And we have a couple of good hedge fund managers there. They share to the extent they can. They're not going to give you trades. That's against all the rules. But I mean, their rules, because they can't share that. And sometimes I worry about my own sharing too much. What if somebody sits on the other side, goes after me? But I'm too small for that right now. So I'm not that paranoid about it yet. But anyhow, you would see that we plot this, so you also get the view of the ATR. Matter of fact, I'm trying to see if I have a screen here that will show you that. Hold on, let me take this down. There you go. There you go. We show something like this, except this is, yes, we show NQ there too. But you could see what's happening with the ATR as it changes throughout the day. Of course, now it's going to be nothing. It's going to be dropped down to zero. Come to, well, right now markets are closed, but I'm saying even between now and 9 p.m., there's nothing, very low. But during the day, this is a constant, it's like a roadmap. It's like your Google phone with the maps on it. It shows where we're heading and in terms of volatility, because volatility has very better cycles, predictable cycles, vis-a-vis price cycles. And look at here, because this is near the close. Of course, right after the close, the reversal came. But look how once we broke out of this bottom, dot, kept on hitting. We go a little bit up, but then comes a retest. Then it clears. What I look for is separation from the dots. Once the separation happens, watch out. Watch out. It's just a matter of time. Look at how many retest failures it went through. Could not go below it. Let me blow this up again one more time. Hold on. You could see this area. No, that's the morning. We're at 5, yeah. You could see what happened here. Boom, boom. Now, of course, I'm looking at ES here. I'm more familiar with NQ because that's my what I trade these days. But you could see how we pulled up. Once we pulled up, let me bring this to get okay, there you go. Once we pulled up down here from hold on one second. Let me let it go. That's the spam. Okay. Once we passed 3 o'clock, 3:15, and it could not penetrate. Look at this. That's a reversal. Of course, you got to understand candlesticks. You got to understand the patterns. That's not something the software can teach you, but I'm sure most of you guys do. If you've survived in futures so far, you have that under your belt. That's nothing new. But that's a reversal. Still cannot get through. Look at how it touches, pulls up, retest again, touches, clears. Here we go. Crosses through DMZ. Turn on your engines, and there it goes. Boom, boom, boom. And look what happened near the close. And look at that reversal. Could not get above it. This bar, the top of this bar versus that bar. Yes, the red there, but it could not even go above red bar, like solidly this was or that was. This is crucial to see. Where's the red bar in the bar itself? Because these doesn't mean we're done yet. This says it does. This says it does. And woof, we pulled back down. And look where we are now. We're below it. Now this gonna get dicey here. This says most likely if you don't have a gap up at 6 o'clock when the futures reopen, oh my God, boom, boom. We got more down ticking. Now, as I said, some people feel tomorrow is a vol day, volatility event day. My work doesn't necessarily say that, but who the hell I am? Who am I to say you can't? If tomorrow, I think Friday is a FTA on J&J. I think Mark could get into that a little bit more. If tomorrow is an event day, and Friday is a J&J issue, I don't care how they spin it. We could have a down market, and then I would buy Monday open. Now, what's the chance of that? Because by then we have a flush. I would want the first hour, not the open, first hour of the open. I would buy at 10:30. I think it would be a good flush. Now, where do I see that chance now? Today was a strong day. Probably no more than 50%. But let's see if tomorrow's the event day, and then into some vols, and that could be. This is a vol cycle study, but it needs a catalyst. There's got to be some sort of news tomorrow. That's the problem. Mark, what's your idea? What's your feel? Could you expand a little bit on what you see with J&J?
Well, Well, Johnny John, they're basically just going to put a label notation on there because I mean you have to understand that you have a few deaths and you have probably about 9 to 10 cases, but
Total.
there's over 7 million vaccinations out there.
Correct.
I mean, so when you think of studies and you look at the studies that were preliminary for the Moderna, for the AstraZeneca,
Pfizer.
and for the Pfizer, with Moderna and Pfizer being the two most successful, most of those studies were 30, 40,000 people. Such a big difference than 7 million. So, you know, they're gonna put on there that you have to be more cautious to the people that have the tendencies that they noticed in those 6 to 7 people, which I've been reading, basically stated that they were people that were not older than 60, they were younger, but they were people that had a low platelet count. So, you know, in their blood, the people that got these blood clots had low platelets. So they are going to put some kind of label notation relative to that. And they're going to allow the John & John, I'm almost 99% positive, to continue. And in fact, I think they've already continued with it in Europe, I think as of yesterday, with the notation that they got to be cautious of these people, you know, that are taking it. They need to be aware of, you know, maybe check what your platelet count is when you have a blood test. Like today was my second day with second shot with Moderna.
Oh,
and,
congratulations.
Thanks. Just to be safe for myself, I was curious about the platelets, so I've checked my platelet count because I get blood work done probably every couple of months because of my diabetes and my sugar.
Right.
And, you know, my platelet count was, you know, right in the middle range as opposed to it being low and high. So I wasn't worried at all. But I think they're just going to label it and they're going to say, okay, you've got to obviously put some caution to the folks that are getting it done. They need to make sure that they're checking individually, maybe what their platelet count might be, the notation they put on this. But I think they're going to allow it to continue. And I think that's what's probably going to come out tomorrow and the next day. And I think part of the market being up today, even though Johnny John was only up about a dime, I think had to do with what the comments were made yesterday late about how they were going to allow the Johnny John vaccine to go forward over the pond there. So I don't think.
Go back to that vaccine then. So this is all about the vaccine then.
Well, yeah, I think it is. I really
it's not
do.
the green season. It's not the Fed. What the Fed is doing. It's not what the White House is saying. It's going back to.
No, because I mean, when you think about the Fed, Powell has been very, very clear. He has not wavered one bit. He's basically said that he's not going to do anything in rates until he sees that he's totally comfortable with employment. I think there's no doubt in my mind he's looking at employment, and you know the curveball with employment has to do with the fact that you've got a lot of folks that have gotten stimulus payments that are on those lower income groups that are kind of comfortable with unemployment. So a lot of your service group people and lower wage earners, they're not too anxious to get back to work. So what's happening is that now you've got available jobs, but people aren't willing to go back to work. So that's the curveball to really understand where is unemployment really at. So, you know, that's going to be difficult for him to try and decipher. But I think the key to that, him with rates, and I know that they all keep pushing to try and get him to waver in his wording as to what he's looking for, but he's not budging. He's not budging until he definitely sees there's a problem. There's not a problem. We're going to have inflation by the problem with supplies. The problem you see that in the news every day, how the supply chains are being interrupted. So there's no doubt prices are going up. I mean, you know, I watched that just in my shopping at the grocery store. You know, I paid $20 for 6 chicken breast organic one week, and the next week I paid $30. So you know that there's inflation happening in the food, which what people do the most buying is food.
Right.
You're seeing that happen in gasoline,
Gasoline,
which
sure.
people are traveling with their cars. So the simple things in life, you could see there is inflation happening there. But to me, I don't think it's going to be enough to cause him to do anything yet, because I think the key factor to him is definitely going to be the unemployment. I think that's the one that's going to move the needle, that's going to change possibly the interest rates. So if you notice the last 2-3 weeks and the week and a half I was on vacation, there was no volatility in the market. It was flat. It was a flat line. And I think the only reason why you had a little vol the last couple of days was relative to what's going on with the vaccines.
Right.
You know, you had spikes across the pond, and you had spikes here in Michigan and different parts of the United States. And I think that's what made the market get nervous to the downside. And then when the Johnny John news came out that, yeah, these are a few cases, yeah, this happens. And it looks like they're probably going to get a thumbs up, because if you recall, the comments were that previously they weren't going to make a determination for Johnnytown until like 2-3 weeks. Now it's happening tomorrow and Friday.
Now,
So
do you think they're going to, based on your experience and watching these things in detail, timing-wise for me, do you think they're going to do this after the hours, or it's going to be middle of the day?
no, I think they're going to make an early morning statement, if not maybe in the first hour or two. I think they're leading on to the fact that everything's going to be okay, and they're just going to have a label warning. I really believe that's what's going to come out.
Yeah, my fear just is that doesn't come true. That's all.
Yeah.
But I think that's
So,
the
I
chance of
mean,
that is very low.
To me, the volatility in the market, it has nothing to do with the budget. Has nothing to do with him trying to get him being Biden, trying to get his infrastructure package passed. I think the wild cards that are out there are basically what's going on with Iran and restructuring the nuclear deal. I think what goes on with the Russians on the Afghan border. I think what goes on
Ukraine,
with OPEC and oil.
Ukraine border.
Yeah.
Ukraine.
And and I think what goes on, obviously, with the spiking of COVID, those are the real wild cards that are going to create volatility and make the market move.
Okay.
Now today, you were referring to that part where you showed in the ESs, when you look at the four streamers, and I made a comment in the chat room on the GoToMeeting chat room. I made a comment earlier in the day that all four streamers in the ES suite, they all turned above the median. Okay.
Yeah,
so when that happened,
there you go.
Okay.
Where is my ES?
Yeah, you have your ES.
I had it. I just walked away. Sorry, I'll find it. Go ahead, sir.
When that happened, that was a go signal for me to the upside.
Oh, there we go. There you go.
And there was strength there. And when that happened, that was around 41.35. So if you look at the 41.35 all the way across,
right here, right there,
right about there, that was the go signal for me. So I went in and bought at the money calls of the SPY, and I ended up selling the stock against them. I bought them at 80 cents. I bought the at the monies, which at the time were the 414s. Okay. So I paid 414s. I paid 80. So that's equal to 414.80.
Right.
And I ended up selling stock at 415.16, 415.80, 415.87, and 416.21 against them, which were all these moves up here.
Right.
So
nice.
The streamers were sensational today, and the trend was sensational. The CI was sensational, and these are tails that are out there that, to me, they're significant. And then when you show the ATR, I mean, I comment on the ATR when it's quiet. When the ATR got quiet between 41.50 to 41.55 for that whole period of time. ATR was low, and then all of a sudden it popped again. And that's when you got your pop going up through the DMZ zone. So, you've got the ATR as an indicator. You've got the streamers as an indicator. You have the DMZ zone as an indicator. And now you've got the new feature that you're showing with your dots, basically.
Which basically combines DMZ with the multiple that you have a choice on the ATR. So it's very adaptive.
Yes. And like you said, when you go through the DMZ, man, and you go through the bubbles, you see the activity when that happens.
Mhm.
You've got down moves or up moves that are significant to take advantage.
Look at
Now,
this.
I've been
Right.
using,
Look at
yes,
this right there. Yeah, sure.
right. And I've been using the bubbles that Mike and Fari created for the radar screen for which Fari brought up and showed you for the people that are doing the expert happy radar screen.
Right.
I mean, the amazing part that's in there, and this is what's helped me. You know, the biotech world is a unique world. It is a very volatile world. It's very difficult, like it's been the last 8 weeks, because it's been straight down. You know, basically, we're 80% long, 20% short, so we've gotten hammered in many cases. But you know, we believe in these names, and there's a reason why we have our names in the biotech fund that we're long.
Wow.
And we weather the storm, and I scalp them intraday every day to battle the downside. But as an alternative to that, I look at the radar screen and I look at the names that are presented through the radar screen as buys and sells. And if I see significant areas where you've got moves up and down, and they're stocks that have liquidity, both in the option side and in the stock side, and their names where it looks like I can't create option positions, I create option positions. I mean, I'm not going to try and put on an option position in a stock that the market makers are making $3 to $5 white markets, because you know, once you get in, you're not getting out. I could use stock as a hedge, but that's not a helpful alternative for me. But when I get a name that's in the radar screen that's a buy and sell that has a lot of liquidity, both on the option side and the stock side, and you have tight markets, I jump in that. And I'm telling you, I've been doing this now for 3 months. I'm running at an 80% winning range every time this happens. And you can see what he's showing you in NVIDIA. NVDA is a high price stock, but if you look at Microsoft, it happens. And you'll find, if you go through the radar screen and you look at some lower price stocks, you know, probably you'll see significant opportunities. And it's just plain as day in front of you. It's just opportunity after opportunity.
Look at LMT, Lockheed Martin.
Right.
Wow.
So it shows up, and then you have the radar screen to help you get in there. You have the bubbles to show you when they pass through the DMZ. You can run more than one time frame. I run daily in 240 minutes to give me a confirmation of when it happens, because the 240 is going to be early. And then when it gets a confirmation, the 240s tell me, yes, it's definitely through the DMZ. But when the daily goes through the DMZ after the 240 does, I win every time. And then I look at the CI beneath that, and I look to watch the trend. And you know how to read the CI diff bars. As they get bigger, that means the trend's accelerating in that direction. Look at the bottom, Fari. Look at the CI diff on the daily on the bottom. You see how those bars are getting bigger at the top there? And then you see how they reverse. And look what it tells you, that you're done. You got to get out. You get out. You don't have to take a short position, but you get out. Now, on that name, if you look at the 240, it says that at 390, it's reversed. You might want to take a short position. But I don't use that 100% of the time. I want definitive evaluations to the downside. So I probably won't get really excited in here until we get near the 377, 380 range.
This area, You're going by classical rules. Yeah, I get you.
Yeah. So I mean, but you can spec at the 390 range, and you can see that's $3 winner already. But I want to be sure more than speculating a lot of things that I'm doing, because I'm creating option positions. And when you're creating an option position, you need a little more than a few bucks to be right. Okay, because you're dealing with volatilities which are normally high in these high price stocks. Plus you're dealing with the volatility of the movement.
Theta. You have theta too.
Yeah, so in order to pay for that kind of move, I need big moves. So I wait for a confirmation for LMT. Once we get through near the 380 range or 377, that's when I establish a downside position if the trend is continuing that way.
Okay, there you go.
But it's been an amazing tool.
Look at the video. Look at the video. Yeah. The one thing about the problem up here is that markets are so high. You really have to have some conviction to short.
Well, you have to have a little bit of understanding of the group that you're in,
right?
Because you see how the market changes groups as far as the rotation is concerned. So you need to be privy to that and understanding that. You know, it's not like you're just throwing darts at something. You got to have, you have to become a student of the market. which is really what is first and foremost to what you're going to implement as far as using these tools. I mean, you just can't sit there and say, okay, that looks good, I'm going to put something on. You need to analyze the stock. What's this name doing? What's this group doing? Okay, where's vol at historically? Is this a good time to get into the vol? Is it too high? Or even if I get a big move, I won't be able to make money. You've got to be able to analyze all these pieces of the puzzle. And then when you have all the pieces of the puzzle to put together, and then you take the tools and use them, you crush them. Like right now, the reason why I chose to use in ES and the radar screen and what's going on with the streamers, vol is exceptionally low in the ES. I mean, okay, so you know when you go in, if I can grab an at the money call, even for today, I use today's expiry, and it's only sitting with about 30 cents juice, and it's an 80-cent option. I'm all over that. I'm all over that. That's a great opportunity. I have very minimal risk if I'm wrong, and if I'm right, I crush them. And that's what happened today. I crushed them. So, you know, it's just a question of learning what the tools are, and then obviously putting together, you know, your little sheet of things that you need to study and prepare for, to look at, to tell you that this is a confirmation that this works. And now with the dots, you're doing the same thing. I mean, look at the dots. Did any of those dots break down through? Not one.
No.
And if you look at the streamers, same thing with the streamers. The streamers all held, if you look at the streamers, all above the median. You look at the streamers, all growing in the CI diff. You look at the streamers, the shorter term, the shorter size started getting overbought and backing off, but the big size stayed strong. And then it didn't happen to back off until the end of the day. But like you said, in order for me to believe that the market's going to go south, I believe that we need to break these mediums to the left side where the big volumes are. I think you got to get down through 41.35 in the ES for it to be a breakdown.
That's 32 right there. Yes, 32, 41, 32. Yes.
So
this is the congestion area. Yeah.
Yes, I won't feel that we're breaking down until we get through there. And if you look at the streamers at that time, my guess is they're going to be breaking down through their medians, and that's going to maybe give us a trend to the downside.
These are real time, guys, folks. This is all real time. This Admiral, this is what bothers me. Sell the rallies and the crude.
Yeah,
and that's just not a good indicator. You know, going forward, unless this turn around. Well, you can't have this go too far up because cost for transportation. But
right,
it's a double-edged sword. But it's a bad omen if you're selling the rallies on the crude. So,
well, I think there's too many unknowns out there right now in crude. I mean, you have obviously the political, the geographical problem with what's going on up there with Russia. You have also what's going on with OPEC, and now our government trying to make demands and changes there, where they're going to kind of slap hands and put restrictions on. I think yesterday they talked about putting together some kind of laws in place. I mean, they're trying to change, you know, the way things are done, and I think that's why you got that kind of volatility in oil the last couple of days.
Well, you also realize today, I read somewhere that this was the first day since Biden took over that the vaccination is less than the day before.
Yes.
Which some of it comes from hesitancy. So we have, we don't know. We need more data. It's too early. We're at the edge of that envelope, flight envelope that, but those who want to get vaccinated are done.
Well, you have a lot of people. I mean, even in my family, my brother, the doctor, he's not going for a vaccine. He said, why should I get vaccinated? I'm very healthy. I don't have any other issues. I don't have diabetes. I don't have high blood pressure. I don't have cholesterol.
Right.
I'm healthy as an ox.
Right.
I don't see a need for me to get it. Whereas with me, the reason why I had to get it, I have high blood pressure. I'm over 65. I have type 2 diabetes. So, you know, I have a young family that I started. So I did that out of caution more than anything.
Right.
I mean, my younger wife is telling me I'm crazy going for the vaccine. She begged me not to go for the second shot today.
You're
and I said,
me.
I got to do it. Oh, yeah, she begged me not to go. She doesn't believe that there's a need for it. She said, this is like the flu. This is how they. There's a lot of people that feel that way and believe that way.
Meg FT,
Even when
full disclosure,
Huh?
Meg FT, she's a Trump kid. Okay. So.
Yeah, she's a Trump kid. But if you look at even today, when I went into the for the vaccination inside the Lake County big house that they had this at, the people that were getting vaccinated, most of them looked very sickly. That was my comment that I told my wife. I said there are very few young people there or middle-aged people. Most of them looked very sickly. They were they were hunched over, and they looked sickly. I kind of felt out of place.
They do need it. They do definitely. Those are the
Oh,
types that need it.
absolutely.
Yeah.
Absolutely. So I mean, there is that problem with the country. You have a lot of people that don't feel they need to get it, and they're not going to. Will eventually the herd immunity help that group? I don't know. We'll have to see how it plays out. But what bothers me.
Well, what if we don't get the herd immunity?
Well, what bothers me is you have all these.
That would the pressure. Oh, actually, one second. That would put. That's something I'm going to mention. The pressure on the economy getting better, and closer to better employment. I can't say full employment, but better employment. That's all you were saying.
Yeah, but you've got, the problem that people don't realize is you're getting all these variants, which, right now the existing vaccines seem to be handling it. And if you read the news the past 3 or 4 weeks, they're all Pfizer CEOs talking about there needs to be a booster. Yeah, and then he says you need to have a shot a year.
Yes.
So that bothers me because that tells me there's something still out there and something coming that they don't feel comfortable.
Right.
Even though obviously creating vaccines and giving shots is good for their income statement, it's still a problem. I mean, like I said, they created a vaccine in a short time frame. I mean, look at the HIV. They don't have it's 12 years. They still don't have an HIV vaccine that works and they're comfortable with.
Yeah.
They have these different treatments that have helped, but it takes a long time to create a vaccine, and the SARS virus is here forever. Okay, that's what I try and tell all these people that don't want to get vaccines. SARS is here forever.
Based on
different strains. The
on,
virus itself is going to be here forever. It's now become like influenza. It's SARS. You now have influenza and you have SARS. That is going to be with us for the rest of humanity. You're not getting rid of it. It's not going away.
So more boosters.
Well, you're going to have to deal with it. If it gets life threatening, more boosters, a better vaccine. But as far as I could tell, it's acting a lot like it wants to be like your different flus is what it's going to be.
Just the stronger mutations.
Yes. And that's what's happening. And I mean, it's just the way of life. I mean, you've got different countries and you've got different ways that they live, and different ways that they obviously farm and produce their produce, and how they have. I mean, it's all these different lifestyles throughout the world, and that's what causes problems. And the ability for the world to travel is what causes the other problems. But that's life. So you're going to have to deal with these things, and that's what I tell all my family that SARS isn't going away. COVID is just going to be something else in the next 2 or 3 years. It'll have 2 or 3 mutations, and it'll have a new name.
Admiral, we have a question from Robert Brady. 2 of them, actually. Would you like me to read it, or you want to read it out for you, or you want to?
Let me see. What time frames do you like? 3 and 5 or the other? Well, I use when I'm doing the ES, I've been very comfortable in using the 5 and the 12. Or I might have the 3 and the 12 now. Let me see what I'm using.
Okay.
Sure. I'm using the 3 and the 12 in the ES, and I'm really happy with that because what it does is
here's the 3.
When you have the shorter time frame, you're seeing a very early look into what's going to happen, obviously, with the longer time frame, the 12, and sometimes it creates different levels, and then it also helps me make a determination: are we breaking down? And when is it really a true breakdown? Which is a lot of times where, if people paid attention to my levels the past week, I throw my levels out there that are broader because I'm looking for the momentum to either continue both either to the upside or downside, and I'm trying to capture those levels where I'm finding support and resistance, and that's kind of what I do. You know, and
You've been
the
spot on.
streamers,
You've been spot on.
yeah, it's been really, really sensational. The streamers and obviously the tools that go with the streamer, which is the DMZ, the CI. I mean, they're spectacular tools.
You were also spot on when we had the desktop V3. When that chat room went down because of security of the browsers, the new browsers, that was a shame. But the data is there. We still have it in our transcripts, you know. But
Yeah.
I can't wait until in about 2 weeks, 3 weeks, we can have it back up and you know, have you out there more active. But at least the GoToMeeting, from the feedback I'm getting, is good enough for people to be engaged and not feel like they're left out one piece of the puzzle.
You know, I think what's the most important part, and if you look at the screen in front of me, you know, you look at your time frame from 12:30 all the way up into, you know, the breakout right at the end. I mean, you know, and look at the volume. You look at the ATR, you look how it's low, you look at the volume, you look how it's low. You know, you're not supposed to get really engaged there.
Right.
Okay.
Right.
You know, you're supposed to sit on your hands. You know, discipline is, I think, is the most important part of a trading acumen. If you have discipline, you will always win because you'll have stops. You will not take positions bigger than you should.
Right.
And you won't ever be in a feeding frenzy like you're afraid to miss something. And you know from history how I've always told you, there's one thing great about the market. It's there every day.
Yes, that's true.
You're always going to have an opportunity. I mean, I tell that to my partner all the time. He'll say, man, if I would have got that, I could have done that. Or if I would have waited, I would have got that. And I tell him all the time, I says, it doesn't matter. It's water under the bridge. Move on to the next trade.
Yeah,
You're going to have so many opportunities. It's unbelievable.
When it shows up on your chart, that's rear view mirror. What you need to think about is a front windshield. What's beyond the front windshield? Yeah, that was unreal. Another question for Robert Brady. Guys, I just don't want to stretch it too long, but does the bearish mode with a buy, the reason I'm saying this, Admiral, because you do practice this part more than I do. So let me go. He's talking about the watch list. I think it's here. There we go. That's actually okay. Here, let me do it your way. Okay, you will do two screens that you like. Does a bearish mode with a buy action and vice versa affect your trade action, or do you just look at a chart?
No, you've got to combine both, because if you look at the Happy CI Diff RS, which is what creates the action, okay, what I have a tendency to look for is I'm looking for a very wide range in that CI Diff RS. Like take a look at it. It's the FTNT. Pick a name that's got a very wide range, like, you know, over $2, like GSX 282. Pull that name up. Let's see what that looks like.
Okay.
Okay. All right. So when I look at this name, you can see it's turning up. It's crossed, which is why you got the red bars are depleted, and now we're starting to create green bars.
Right.
Now, when you look at this, the shorter time frame is 29.59. Okay, where it's at. It's already broken to the upside there on the short time frame, and it's starting to trend to the upside. But I'm looking for a confirmation in the daily, because when I look at this chart wise, you know, I don't think you could see my mouse. Put your mouse over that red bar that's to the left, Fari, all the way to the left, up top in the chart itself. The chart itself.
This one?
Not the big bar, the one below that.
This one.
All right, now, if you were to draw a line across that, that's probably going to show up at 38.30, above it, right above it.
Here.
That line there, 38.94. So when I look at this, I'm looking at the chart itself first. All right, where do I need the momentum to get to break this downside pattern? I think it's got to get above that first big bar right there. To me, once I get through there on the upside, I'm going to be extremely comfortable. Now, when you look at that, you say, well, wait a second. On the daily chart, that's $9 more than a 240. Yes, it is.
That's a lot of juice.
A lot of juice, but you know,
that you're paying somebody else rather than somebody paying you.
I don't know the name. I mean, is there a lot of volume in the name? You see the name broke down and there was a huge amount of volume. let me put
Who is
another
this
part.
guy? GS6
Look,
Tech 2. I have never heard of him before.
so when you look at this, so I'm going to put it in my interactive brokers and see what we're looking at as far as what kind of name this is. All right, so it's Tech Education Incorporated.
Oh, gotcha. Yes.
It's got a 7.5 billion market cap, so that's healthy. I'm fine with that.
Right.
And you got a narrow range from March 27th all the way to here. So, it's been beaten down. It's got a huge gap from 65 down to 30 that occurred from around March 25th to March 30th, right?
Right.
So if you look at that breakdown,
Yeah.
okay, you look at that breakdown, I'm not going to be comfortable in believing it to the upside until it goes through that second red bar. I got to get through there. And then if you look to the left, you see where your bubbles are to the left here, Fari, on this chart you're showing?
This one?
All the way to the left, on the bottom, right there.
Right there.
All right, if I were to come across with the line there,
Uh-huh.
I want to break that area. Visually, chart-wise, that tells me that's a significant place to get through on the upside. And that number is probably around 39.
52.
The top of it. Go to the bottom of that, right in there.
Okay.
I want it right in there. That's a
47.
significant area.
47.
So 38, 39 is where I would take a chance to get long.
So you got about 8 points above it.
And when you get above that to those bubble points to the left, this thing could come back all the way.
So, and would you put you play it with cash, or you buy options first? And
I would buy options because it's kind of risky. So I mean, if I got that movement, I would probably, once I get through this 39 range, I'm going to probably play a 40-65 vertical.
40 to 65 vertical. Gotcha.
Yeah.
So you're gonna put a spread on. You're gonna put a spread.
Because I'm gonna put a spread on. It's not gonna be.
So your outflow is less. Yeah.
Yes, it's gonna be probably decently priced. 65 is the gap. Let me see what I show. I don't know if I could get anything out there. And because it's gonna take a little time, I can't be out there in the next 30 days. So I probably would look at that for something out to July. So if I look at July, let's see what the July options are in there. My one tool tells me what vol is. Vol is extremely high. Vol was always basically between 80 and 100. So now I'm going to look at July. Let me see what July looks like. And I would look at July on this. I got to add July. I got June, but I need more time. July, I'll put July in there. July is going to have a lower vol, I guarantee it. Yes, it does. Not that much lower. July is in the 150 implied range, but now I'm going to look at the spread that's probably going to be the 40-60. Okay, now here I am looking at the 40-65 spread in July. Hold on, let me go back here to that. All right, the 40-65 spread in July. I got that there. I want to buy this. So hold on. 40-65 in July. You're talking a 25-point vertical, okay? And that vertical, you could probably own it even at a 135-40 vol for like 3.25.
Yep.
Okay. So if I'm able to buy a 25, and obviously that price is all going to change in the next 5-10 points up, but it's not going to be. I look at verticals. I always try and get into verticals that I'm really comfortable with when I see a trend change, like 40-65. I look for 1/3, 2/3, meaning I'm willing to risk 1/3 of the money to make the other 2/3. So in this case, 25 points, I probably would pay up to $8 if this thing gets up to $40. You watch, that's probably where the price is going to be. And then I would put that on because I think that's a good risk reward ratio. All right. And then you can see with the stock $30, it's trading for like 3.25. So, a 10-15 point back down, I'm only risking like 8 to 3.5. I'm risking $4.50. But I want a confirmation it's a breaking out to the upside. The streamers are going to tell you that. The CI is going to tell you that. Mm-hmm. And reading the chart's going to tell you that. And the radar screen is going to tell you that, and then I'm going to go on and put these spreads on. That is how I made most of the money in using the radar screens. Is I put on a lot of verticals, both for the long side on the calls and the short side in the puts. And like I said, I was a winner 80% of the time. And the reason why I used verticals was because, not being experienced enough in each of these names, they're new names for me. I wanted to make sure I took some of the risk out of the equation.
One comment from Robert, just to share with you guys, because I'm not sure you're seeing his comments. Admiral and I have seen, of course, Mike and Nancy and Susie, but on Twitter, I assume that Robert is talking about JSX as a possible fraud company. Just so you know, Reg FT for everybody who's listening. We're not endorsing this name, but we're just analyzing, because we don't know anything about the company, but we're analyzing what the chart pattern is. Thank you.
And that's obviously why, it's probably why it fell from 65 down to 29, down to 24.
But also, I think you can't believe everything you read on the internet either.
No, right. But that's what I'm saying. That's why I want.
The stock was at 12 on Monday, traded at 480 on Friday.
So that's why, if you look at it, look what I'm looking for confirmation to get into this name to the upside. Exactly. I'm looking for $39. That's $10 from here.
Because it can't all be wrong, so we got to be careful. Right. You got to do your homework. Yeah, and that's very good. You should do it with any name. I mean, look at Boeing. You can't get better than that. The company is part of Dow, okay, and goes back on the early high-tech companies that are mature in that space called aerospace. And look how they fell apart because of that software with 737 MAX. There's one more comment here. Robert, you need to help me. I'm not sure I understand. I follow you. You're saying TradeStation only shows 10 or 15 on my screen. Shows what at 10 or 15 on your screen? Would you be a little bit more?
I think he's talking 10, 15 minutes.
Oh, time frame.
You could change that.
You could change that. You could change it right here. Right there. Time frame. Okay. Time frame. Right there. You can change it to whatever you want. Now, keep in mind, this is what we're running. Version 925. I mean, we're 10. Within 10, everything should be compatible. Absolutely. We're 925 sub version or update version out of 10, but it should be all compatible. All I know is this. These weren't there. 15 and 30. These are new, but these were introduced probably in version 9. So if you're trading anything new, yeah, and
but he should be able to change the 10 and the 10 and 15 minutes easily.
Exactly. Yeah, he should. I don't know how it doesn't work. I can ask Peter Albino. You can guys email him, palbino@tradestation.com, or rep, and he'll take care of you. There may be a peculiarity you have on your end. By the way, please update your machines. Please update your TradeStation. This security issue that we're seeing with the browsers. For example, let me show you something, guys. Just over here. Let's go here. It has made a havoc for our charts of the transcripts. The archives. You go back, let's say 2018. You do this. See the charts? Because they're not secure. Because they're on the browser. I'm saying they're the new browser using the old way of connecting off of the chart is there. We have to do this. Open a new tab. And the chart shows up. The chart is there. But you have to do this. And I want to document this in this webinar. Turn right and go to as a link or a new window. You'd see it. It's there because it's sitting on Amazon. It's sitting on Amazon showing it, but because of what they had to do to really tighten up on security issues, a lot of these earlier versions are getting into trouble. If you go to new ones, current issue, no problem. All the charts are there, no problem. We made some changes. As a matter of fact, I think it's been about a month now that things are fine. By the way, we do a webinar next week on PMT. We'll let you know about that. Any other questions we may have? You guys may have. By the way, we raised our price on Happy Expert. We did because we came in with a very low ball number last December, and we did a wide range of free trials. We do it with every new product en masse. so we don't go back and forth, people coming with different names and different emails and so forth. We just make it very simple. Upfront, come in, free trial, absolutely nothing. As a matter of fact, those who signed up for regular or had regular Happy, I'm sorry, Happy Pro, they had the regular Happy Pro. We gave them this year, all of this year on us as an expert. Okay, but we recently raised our price on expert. Post two items. One was the bubbles. The other one was the dots. And I mean, that both of these took some effort to put there, but it has nothing to do with our effort. It has to do with what the value it gives you. It has to do with what money you make with it. And if you think about it, I think it comes down to $13.29 a day. A day. You have 66 days. It's $8.77 for the quarter. $13.20 per day. Okay, well, that's less than one handle. If this can't help you give you what's less than just one handle to pay for itself, you shouldn't be trading. Trading is not it. Try something different. I don't want to be rude. I don't want to be obnoxious, but say, have you heard of Uber.com? Yeah, this is not for you. That's less than a handle. It's very, very cheaply priced, but we just raised it a tad. We've never priced anything very high because we want volume. We want people. We don't want, making one guy pay for all of our setup. That's too risky, too much concentration. Keep it cheaper, make it affordable, have a variety of people, and guess what? We get benefit from it, the feedback. MACD indicator, trash it. Question is, this isn't your off topic. It's not. No, sir. Can you give me a opinion about MACD? Trash it. I'll tell you why. As you know, I'm very, very colorful in my language of certain things. Let me go to a chart here. Let me show you why I say that. Hold on. There you go. There we go. Okay. This is a stock RSI. Okay. This is, and I have CI there. Let's see. Here's our CI. Here's our CI and the CI diff. This is stock RSI. This I wrote the code. It's not my design. The idea is not mine. If you go to if you want to get into it and read about it, go to our there we go, suggested reading list. Okay. I don't know if you can find this book, but maybe you can. Okay, maybe you can. This one, new technology. I mean, I'm not sure it's available or not. Okay, it looks like somebody may have it, but they're all used. This is by a guy named Tushar Chande. When I read that book, I found out how poor MACD was. I found out the next level would be, and this is his indicator. Stock RSI, the code is there, but you have to program it. Of course, we added additional features there that we use calendar, this and that, so it's auto. It's easy to manage automatically. Remember, I'm very lazy. I like things. Machines do the work for me. I just want to be. I don't want to be the mechanic. I want to be the commander of the, strike group. I want to think about strategy. Let the machine do what it can, and take me out of that loop because of getting emotional. So I said I'll put this together. That's why they have these rendezvous points we talked about. Scott, if you listen, I don't know if you were in a meeting this morning, the webinar. You should, but on the webinar, I think we talked about the rendezvous points. We said we've got our rendezvous point met, and I've been talking about it from here on. We have a rendezvous point. That's a stock RSI. Why do I bring this up? In the realm of indicators, momentum indicators, MACD is the bottom of the list. Don't listen to me. Read that book. You'll see. He's done a tremendous analysis. A young Indian guy, very smart. I read it on a flight from, I lived in LA back then. In 99, Labor Day, I came out to Tampa. I had some friends here for a visit. I read the book on the flight. As a matter of fact, the copy I have of that book has got a little corner missing. I literally, the one corner, back corner of this, the dog chewed on it. Their dog, not mine. I didn't have a dog back then. And I was going berserk because this book is so hard to find. But in that book, he does this whole analysis. And once I read the book, he measures all these RSI, MACD, there's a one more, a percent R. And then he comes up with a suggestion why a stock RSI, which is a combination of stochastic and RSI. So hybrid he put together. I came with a clean sheet of paper. I said, hell with all of that. I'm going to sit there and do my indicator. I've learned a lot from this guy. Obviously, the guy's smart. He's turning on some light bulb. but I'm willing to do that. Little I know that I'm very dumb. Okay, it took me 2 years to do that part. Yes, not full time. Obviously, I don't have time for anything full time. Not even a girlfriend full time. Trust me. So no, what I'm saying is that I went from RSI. So one of the problems with MACD I have is not range bound. It has a scale based on the tries to do a price. What does that mean? So what does the 19 MACD means? Nothing. Depends what asset you're trading. That's not a good answer. Where I come from. I need something that I can go and say, okay, we have a 20. But first of all, this is bounded. 100 to negative 100. Max. I've never seen it over negative 50 on the downside, and never over 35. With the exception maybe on Bitcoin. Okay, but I'm not crazy about Bitcoin. But this is it just is bounded, and it has no, unlike like a percent R, which has a downside bias. This doesn't have any bias either side. But to write this code, which is about 9 lines, I think, or 8 lines, it took me 2 years. We did not release this until January of 2002. Yeah, took 2 years because we also hit what do you call it? We hit a couple of family issues I had, but also the market.com. So no way we could do all full time on it. And of course, all the ELD, other programs I have that work with me, they don't understand ELD, easy language. So that I had to do myself. And then we had to encrypt it. Actually, Miles Dunbar, the number 2 guy at Easy Language, helped me encrypt that. But this beats RSI, stock RSI. This beats the signals. If you do them side by side, we're a little bit early. Listen, what is the value of an old indicator or lagged indicator? No good. The price is telling you that. You want to know before the price where it's going to go. So you can place your order because only price pays you. Indicator is not going to pay you. You take this value and go to TradeStation or Interactive or TD Ameritrade, they're going to laugh at you. They say, what do you want to buy? Give me the price you want to buy. A forward price, obviously, right? You want an indicator also has a forward view. That means it has to be has a leading, be a leading indicator, not lagging. So, so if you look at it, I think the bottom of this was MACD. Also, by the way, some of this has to do with the math technology. It's tied into math, okay? Back then, when MACD came out, it was great. Various things, slice bread. But that's like, it's like, it's abacus, okay? Versus I9. I mean, when this thing kicks in, you're running an I9. By the way, you do need a good, decent machine. Don't fool yourself. There's a lot of calculations involved here. Not as bad as OTF. And by the way, this doesn't eliminate OTF. OTF gives you a different type of a view of things. But you put them side by side. This is what I've done on the I9 machine. I put one OTF chart, one NQ chart at 3 minutes. And it's a killer. By the way, Bob, for me, 3 minutes and 5. That's it for NQ. You know why? I don't have the guts to go past 5. The moves are too big. The amplitude of the bars are too big. I can't handle it. Too much. Because if you're wrong and you want to be, as Admiral talked about, disciplined, like orthodox about trading. You know what those shakes are going to be? You're going to have you better have an EKG machine attached to you while you're trading. And above certain number, alert comes and you go home. Okay? or go out on the boat. I mean, get out of here. I'm telling you. And if you have a little bit sensitive EKG machine, that could be at 9:38 Eastern. Okay, so you got to be where you can handle and easy. So that's a 2 different problem. Block trades versus what's happening on stop management. This is strictly a stop management, which is what I call SAR, stop and reverse. That was also by Wells Wilder. Yeah, I have his book here somewhere. The book was written like 60s. I mean, back then they were doing by hand charting, and the data was from yesterday's Wall Street Journal. Okay, but some of these ideas are very, very good. It's just we have to adapt it, use technology, and then up it. So I would be a bad person to talk about MACD because I have a bias. So I've studied it. I know how much gaps it has. But you got RSI, you got percent R, you got a couple other ones in between. Then you get to stock RSI. Well, stock RSI showed me what the opportunity was. Okay, let me go back. And that's why I sat down. It took me 2 years. And I'll tell you something. It is basically has to do with the RS the CI CI indicator. It has limit theory. I had to go and look up some of my math book from college because I couldn't solve it with regular stuff that you have in TradeStation. And there was a DLL involved. I'm putting it together. I'm good. So I have a guy out of Boston, retired in 2004, 2005. Okay, he signed up for CI 2 years before when it came out. He has not canceled yet. Are you with me? 20 years almost. Next year will be 20 years. He's paid us every quarter. Now, he's paying us what he signed up then. We've never raised his price. We're never going to. Are you kidding me? That's my honor that he's there on this package. And back then we had CI and DCI. And then came CI diff. We did have CI and DCI. If you go to the indicators, you'll see. Let's see. If you go here, there is indicators. Hold on. No, this is the wrong one. So this has to be updated. That's the old one. Hold on. That's that body. That's the old menu. Hold on. If you go here, there is CI and DCI. There we go. That was the first one. Then became CI diff. Now we took the DCI 2 years ago. Was it 2 years ago, Admiral? I think it was. We came out with DMZ. This switch to DMZ. This is a massaged version of DCI. It's a dual CI. So there's a CI in there. That's why this is so reactive. Okay? But then sometimes you get too reactive, you have to tame it. Why do we do that? We bracket it. With what? With the stops. With these dots, we're bracketing it. It's a concept. It's a risk management concept. By bracketing it, it shows where you should be out of your shorts and start thinking about long. You get long and where you should be getting out. This may look small, but if you go to NQ, trust me, these moves are huge. I mean, huge. You know, all you have to do, let's say you just come in this part of a day, forget the beginning, or just trade first hour, go away, and then last half an hour. Do the math. Look at the moves over there, and imagine how this gets you in. Got you in at this area, right about that cross is coming. The CI is already. Look at where CI crossed. It's early, but you have some. But remember, down here, you're going to have some turbulence. Past turbulence, the noise goes out, some of the juice is out. You're not going to make as much. But look how it kept up. Boom, 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 boom. And all you do is write this as your stop. Write this as your stop. It's rise. If it kicks you out, get back in. Tight stop anyway. Get back in. Who cares? Go back in. Remember, you don't know order flow. Order flow is future. It's going to come to you. It's how you manage it. Good. Now, for watching the morning briefs, we invite all members to come in. Once in a while, we do everybody, including just the MSA list, but all active members come in. And then if you go to homepage, they're posted here. There you go. They're posted here. And of course, a bunch of people already watched it live, but this is for those who missed it. We do not promote this. We should. We don't promote it. We just put it there. But I know if I send it to our MSA list, the numbers explode, and then that's not real. You know, let's look at 72, 71, 94. That's maybe we send out on the what do you call it? On the look at this 129. It explodes. But no, we're a boutique. We do something very special. We're not gonna solve all the world's problems. We're not gonna be good for everything we do. But what we do, we're pretty decent, I think. Well, part of it, we have a great team, great ideas, collaboration, and good technology, and then of course that culminates into what? Good indicator development and very slow. Listen, we haven't done anything since DMZ of 2 years ago. These are all little offshoots of it. We you know, it could be 2 or 3 years before we have a new idea. Why? A lot of ideas are no good. You gotta run them. You gotta run them by machines. That's why somebody makes fun of me. Why do you have? Remember, there was a picture of this my office. They said, "Do you need more eyes or do you need more computers? What can we do?" Let them make comments. Whatever. They don't understand what's running on those screens anyway. I run some of these new ideas on this machine for a year before you even hear from me. Why? Because I don't need them. I got, you know, I'm very comfortable with cash flow, both from the subscription and the fund. So what I need to do is make sure the indicator is good. The problem with financial engineering people is they introduce things too early, and that's what themselves and their clients get into trouble. Look at the portfolio insurance by my teachers. What do you call it? What do you call it? Go to active. I'm sorry. Go to about Robert Geske right there. Not that. There we go. Robert Geske. This guy. This created 87 crash. This guy. Yeah, basically. He's retired, but his course was famous for his get it. I took it twice, and second time he complained. He says, "You got an A minus last time. I don't give A's to anybody. Why are you coming back?" I said, "I'm going for the A plus." Very smart guy in UCLA, but they did the portfolio insurance, and they didn't know what they were doing. The other guy with him was from Morgan Stanley, Richard. Hold on. Buchstaber. Richard, right? No, is that the one? I think it's the name. The end of theory. No, this is a very good book. Yeah, read this book. You'll see. He admits to that. The Demon of Art Design. I have it here. This is the guy who created two problems: 87 crash and long-term capital. Yeah, these two guys were his. Those issues were his. And Perils of Financial Innovation. It tells you to stop back. Don't just take the. This is a good book too. But I had this first. I got this because he worked for a friend of mine, and he ended up major hedge fund. He got fired. I asked him, "What did you fire him for?" He goes, "He just couldn't deliver. A lot of ideas couldn't deliver." So, sir, are we good? Any other questions for me or Admiral? Okay, guys. Again, be on the watch out. We'll invite a few in for OTF Lite in a limited version, that is, which is you get the Skype for business and you get the GoToMeeting. Once we have the V3 ready, then by then you've learned OTF, by then you've learned how we operate, and then we'll invite you for short term on the V3, but we got to make sure V3 is working. We don't want to go out there and give you V3 that's in trouble, even though it has nothing to do with us. It's not our code. It's all the browsers out there. Take a look. Look at what happened with Chrome. Look what happened with, look, why do you think they dropped completely Internet Explorer? They just didn't want to even deal with it. They went to Skype. Look at what I have down here. I have, this is Opera. This is, what do you call it? This is Edge, Chrome. This is Epic. We even tried Epic to get in because I know there's no Internet Explorer. We let it go because of that. So we're not going to bring you guys into trouble. That's going to be 2 or 3 weeks from now. But because where the markets are, we're thinking that we could do that. So we'll with the bubble is sign of a crossing. Mark Carey. Bubble is sign of a crossing of the price into the next edge. So if this is the edge drops, then you're into the, that's a green bubble. It drops into green bubble. Here went through the green bubble. Here hit the red bubble right after another. Green versus red, and you saw. Yeah. We can do it, give you a small test drive if you want on the TradeStation to run it, Mike. But you need, I would urge you to use a PC, not Apple. Okay, guys? We are basically a Microsoft shop, you know, of Intel, Windows and Intel. And because some of the TradeStation stuff still may do a hardware call, on Apple you wouldn't know. Even using parallels, you really, really want a PC. And I suggest i7 and up. And i9s are getting cheaper. Yeah. Okay, guys?
Thank you, everybody.
Thank you all. Thanks for attending. We'll talk to you soon. Admiral, everybody is here. Good, good. Usually by this time they get tired, but obviously I think we did a reasonable thing for all. Fred, thank you for attending. Everybody, guys, appreciate it. Antonio, Benjamin, Diego, Fred, Harry, great chat yesterday. Jeff Pierce, of course. Johnny, Island Johnny. Where's the bottle, Johnny? Louis, thank you, sir. Mike, thank you, sir. Monroe, long time no see, brother. Robert Brady, by the way, Murray was asking for you, Monroe. Murray was. Scott Thompson, thanks for great questions. Tony, we're indebted to you. The last 2 or 3 suggestions you have done been so spot on. It's been amazing. Thank you so much. Simple, but you thought out of the box, and that's impressive. I salute you. Mike Burke and Marcus Esposito, thank you guys. Thank you, Nancy. Thank you, Suzanne. I'm closing this webinar. Diego, I had to get back on track. It was really awful. Yeah, I was very, very sick. Yeah. This worst thing of getting COVID is psoriasis. But the damn thing is there's no solution for psoriasis. You can only manage it. And I was just trying to cap the spikes. So, well, it's fear. Some of it is mental. It gets to you that you may not be able to get COVID vaccine. They may not give it to you. And then what in this environment down here? Yeah. And the psoriasis got so bad, I was itching. I was falling asleep 5 in the morning. You can't come and trade at 8 o'clock with the 3 hours of sleep. You're a zombie. And especially somebody else's money. I have some bucks in there, but majority is everybody else's money. I can't. Career conscious, you can't go there. You know, you gotta make the mincemeat out of yourself. I'm staying at home. I haven't left. Everything is electronics ordering, and a limited diet. I'm on plant-based diet, so things are simple. Anything I need for the next couple of days, Whole Food. It's a mile away. They deliver. They leave it outside. We're good. At seat to table, they call me the astronaut because I go in with the double mask, face shield, baseball cap, overalls, and hiking boots. And I'm in there 5 minutes. You know why? Admiral likes the duck eggs. He won't eat the cage-free, free-range eggs. With my luck, the dog wants duck eggs, and so that's the only place sells duck eggs in town. But I'm there for 4 or 5 minutes total, and I can only go to a cashier that's masked. Why? They're Trumpkins. They said up front, if you're not wearing a mask, that means you may have a health condition. Because we cannot ask about that, we won't ask you. Come in. Can you believe this? Can you believe this? Yeah. So I head up, and he said something to that effect locally. So the school district took his contract away. He had a fantastic food contract for the school district. They took it away from him. Yeah. So listen, pay attention to data and science. Rest is garbage. With that said, I'm out of here. Any questions, anything for me? You guys need it? You have any questions, anything you need? I'm around now. You can send me an email. I'm still catching up on some other email, but we've made folks whole. We've come back. We help people. We've done extra stuff. Now we're doing 3 webinars a week on market timing every morning, every other morning, and as live, including what's happening on the econ calendar, what's happening with overnight activity, news-wise, and so forth. And I'm very pleased with that. So, and wait until we get V3 out. We've got V3 3.1 out, and then immediately after that, or the month after that, will be V3.2 with Teams in there. Because Teams is the future. Skype for Business gone come August 1st, and we have to be ready. Good night, everyone. Thanks for attending. We'll see you next week in a market timing webinar. We'll send it to your email. Thank you. Good night.